Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with another update on the Russian ruble. If you've been following the channel, you'll know that over the course of the last few months, I've posted a number of videos talking about the decline in the value of the ruble. But the reason that I wanted to post another update today is that the ruble has now crashed through the critical $1 to 100 ruble level. And this is the first time ever in the ruble's history, excluding the exceptional movements that we saw in the initial few weeks after Russia's invasion of Ukraine, that the ruble has moved into a triple-digit exchange rate against the US dollar. And of course, the reason that this is so important is that the Russian economy is entirely dependent upon the sale of fossil fuels. Its two single biggest exports are oil and natural gas. And the sale of goods in both of those markets are benchmarked in US dollars. That's what most countries in the world look to when they're agreeing contracts to buy oil and natural gas from Russia. And the other reason that this is important is that the generally accepted principle in economics is that when your currency is performing well, that indicates that your economy is doing well. The strength of both generally goes hand in hand. And the reverse is also true. When your currency is performing weakly, it generally indicates that there are problems in your economy and nobody wants to buy your currency. And whilst you may be sitting there thinking, does it really matter that the exchange rate is now over 100 rubles to $1 US? I can guarantee that this will be a major issue for President Putin. He will not be happy that the ruble has crashed to such a low level. When the Soviet Union first broke up back in the early 1990s, the exchange rate of the US dollar to the ruble was set at around 5 rubles to $1 US. So 100 rubles to $1 represents a collapse of more than 20 times. And I'm absolutely positive that this isn't a landmark that President Putin wanted to record under his presidency. So in today's video, I'll have a detailed look at what's going on in the exchange rate between the ruble and the US dollar. We'll go on to look at what's happening with the euro, because historically the euro was the second most important currency from Russia's perspective. We'll then go on to look at what's going on with the Chinese Yuan and the Indian Rupee, because as I'm sure you'll be aware, those are now the two biggest markets that Russia is focusing on in terms of the sale of oil and natural gas. We'll then have a look at what's happening with Russia's exports. And then we'll go on to talk about what's going on with Russian inflation. Because generally, when your currency is weakening in the international markets, it tends to cause inflation in your home market, because all of the goods that you're importing become relatively more expensive for all of your people. And this is something that I've been highlighting over the course of the last few months, and we are now starting to see an increase in the levels of inflation in Russia. We'll then go on to have a look at what's going on with interest rates in Russia, because as I'm sure you'll be aware if you follow the channel, there is an intrinsic link between inflation and interest rates. And then finally today, I'll wrap up with my summary as to what I think is going on with the currency and what the implications of this are for the Russian economy. This chart shows the exchange rate between the US dollar and the Russian ruble over the course of the last 12 months. And as we've discussed before in the channel, when we're looking at a graph which shows the exchange rate between two currencies, we generally quote the stronger currency first, so the one that has the higher individual value. And as I mentioned at the start of the video, the US dollar is currently worth more than 100 times the Russian ruble. So if we start off by looking at the situation 12 months ago, $1 was trading for around 60 Russian rubles. Today, it is now trading for more than 100, which represents a fall in value of the Russian ruble of around 68% over the last 12 months and around 36% over the last 6 months. And if you look at the shape of this chart, you can see that there has been a consistent and continual decline in the ruble in the last year. Now, if we expand the chart out to show what's been going on over the last 5 years, we can see the impact of Russia's invasion of Ukraine, which started on the 24th of February 2022. And you can see that immediately following that news, the value of the Russian ruble collapsed. And for a short period of time, $1 was trading for around 125 Russian rubles. However, that position quickly reversed. This was an exceptional period. And actually, by the start of July 2022, $1 was trading for around 50 Russian rubles. And at that time, a lot of commentators and supporters of Russia said that this was a sign that the Russian economy was very strong, that the fall after the initial invasion was caused by a closure of the markets and wasn't wasn't really a reflection of the fact that the ruble was in difficulty. And there was a lot of speculation at that time that the war could actually be a positive thing for Russia, that they could change their trading relationships and actually come out of this looking stronger. And as I mentioned at the start of the video, a lot of commentators were saying that there was a close correlation between the strength of the currency and the economy for Russia, and the fact that the ruble had bounced back so strongly meant that Russia had a very, very secure economy. However, as you can see from that high point in July 2022, the value of the Russian ruble has collapsed. And there are a couple of very good reasons as to why that's happened. Firstly, in the immediate period following the invasion of Ukraine, the Russian central bank was acting in the international markets to try to shore up the value of the ruble. So the bank was buying rubles in the open market to keep the value up. And that's one of the reasons why the exchange rate moved from 125 rubles to $1 to around 50 rubles, because the Russian bank was basically influencing the market. And one of the reasons that the Russian central bank was able to do that was because the market contracted significantly. The vast majority of the countries from the West, who were Russia's biggest buyers of fossil fuels, came out and stated that they no longer wanted to buy any Russian products, and therefore there was a huge contraction in the total market for Russian rubles. However, what we've seen over the course of the last 12 months is that Russia has expanded its trade with countries outside of the West, so it's now doing more business with China and India and other countries in Asia and Africa. And as the market for Russian rubles has started to open up again, it's become very difficult for the Russian central bank to be able to stay on top of the exchange rate. It simply doesn't have enough cash and foreign currency reserves to be able to do that. And one of the reasons that it doesn't have enough cash is because of what's going on in the Russian economy. If you've been following the channel, you'll be aware that Russia posted a deficit in 2022 of around 48 billion US dollars. And in 2023, the situation is getting worse. Russia is consistently posting deficits, and all of those deficits are being funded by the National Wealth Fund. And unfortunately, from Russia's point of view, a lot of its assets that it was holding overseas are currently frozen. They were seized following the invasion of Ukraine. And so the available foreign currency reserves that Russia is holding are currently reducing rapidly. And so the central bank has stopped making its purchases of the Russian ruble in the international markets. And what we've seen over the course of the last 12 months is the ruble moving towards a completely free float. So the current exchange rate represents supply and demand in the international markets. And as you can see from the shape of the chart, the price has fallen as a result of falling demand for rubles. Firstly, because it's lost a lot of its historic customers, and secondly, because the value of Russian oil and gas is falling as the price is falling in the international markets. And the other thing to note about this chart is the historic rate that the ruble has been trading against the US dollar. You can see that the current level of 100 rubles to $1 US is by far the worst rate that the ruble has traded at if we exclude the short-term exceptional period following Russia's invasion of Ukraine. And if we expand the chart out to show the position over the last 10 years, you can see that the current rate is significantly worse than where the ruble was trading 10 years ago, which was around 30 rubles to $1 US. And if we widen the chart out to show the position over the last 25 years, you can see that this time 25 years ago, $1 US was trading for around 9 Russian rubles, which means that over the course of the last 25 years, the value of the ruble has fallen by more than 11 times. This chart shows the exchange rate between the euro, which is the currency used by around 20 countries in Europe, some of whom were the biggest buyers of Russian fossil fuels prior to its invasion of Ukraine, against the Russian ruble over the course of the last 12 months. And this chart shows that 12 months ago, €1 was trading for around 60 Russian rubles. Today, it's trading for more than 107 rubles, which represents a fall of around 75% in the value of the ruble in the last 12 months and 38% in the last 6 months. And the shape of this chart is virtually identical to what we've just looked at for the US dollar. There has been a consistent and continued decline in the value of the ruble over the last year. And as I mentioned at the start of the video, the reason that this is important was that historically Europe was Russia's single largest market for the sale of fossil fuels. Russia had installed pipelines all across Europe that were delivering oil and natural gas directly to all of its customers. And unfortunately, from Russia's point of view, because it's now lost all of those customers, that infrastructure and those sales are now redundant. And if we widen the chart out to show the position over the last 5 years, you can see that the shape is almost identical to what we just discussed for the US dollar. So immediately following Russia's invasion of Ukraine, there was a collapse in the value of the ruble, and at one point it was trading for around 140 rubles to €1. In the period between March and July 2022, there was a remarkable recovery in the value of the ruble as a result of the Russian central bank stepping into the markets and buying rubles to shore up the price. And at the ruble's strongest point, €1 was trading for around 55 Russian rubles. However, over the course of the last 12 months, we have seen a significant deterioration in the value of the ruble as a result of the two currencies moving towards a free float, so not being supported by the Russian central bank. And once again, you can see from this chart that the current exchange rate is the worst that the Russian ruble has traded at any point in the last 5 years, excluding the short-term spike that we saw after the start of the war. The current exchange rate is significantly worse than it was 10 years ago, when €1 was trading for around 45 Russian rubles. And if we look at the rate for 25 years ago, when €1 was worth around 15 Russian rubles, you can see that the ruble has deteriorated by around 7 times in value. Now, there's been a lot of commentary over the course of the last 12 months or so about the value of business that Russia is now doing with China. China is now Russia's single largest export market, and the exchange rate between the Russian ruble and the Chinese yuan is really important to Russia, firstly because it's selling a lot of products, but secondly, it's now become its largest import market. Russia is buying lots of goods directly from China. And unfortunately, from Russia's point of view, China has refused to do all of these contracts in Russian rubles, despite the fact that President Putin wanted to do this, but rather all of these contracts are now being agreed in Chinese yuan. And this chart shows the movement between the two currencies over the course of the last 12 months. And this shows that this time last year, one Chinese yuan was trading for around 9 Russian rubles. Today, it's trading for almost 14 Russian rubles. And that represents a deterioration in value of around 55% in the last 12 months and around 29% in the last 6 months. And once again, we can see the same shape that we saw for the exchange rate against the euro and the dollar. Over the course of the last year, there has been a consistent and continued decline in the value of the ruble. And if we expand the graph out to show the situation over the last 5 years, you can see we've got exactly the same dynamic as we've just talked about. There was an immediate fall in the value of the ruble following the invasion. We then saw a dramatic recovery, but over the course of the last year, that recovery has disappeared and we've seen a crash in the value of the ruble. And it's now trading at the lowest level that it has in the last 5 years against the Chinese yuan. And if we expand the chart out to show the situation over the last 10 years, you can see that 10 years ago, one Chinese yuan was trading for around 7.5 Russian rubles. So the value of the ruble has almost halved in the last 10 years. And if we move on to look at the chart for the last 25 years, you can see that 25 years ago, one Chinese yuan was trading for less than 2 Russian rubles. So we've seen a deterioration in the ruble over the last 25 years against the Chinese yuan of almost 7 times. Now, the other major trading partnership that Russia has developed over the course of the last 12 months or so is with India. And this chart shows the movement between the Indian rupee and the Russian ruble over the course of the last 12 months. And this is a really interesting chart because 12 months ago, one Indian rupee was actually worth 0.75 Russian rubles, which means that at that time, the Russian ruble was actually the stronger currency. So if we'd have been looking at this chart 12 months ago, we'd be talking about the Russian ruble against the Indian rupee. However, as you can see, over the course of the last 12 months, because of the deterioration in the value of the ruble, the Indian rupee is now worth more. And the current value of one Indian rupee is around 1.21 Russian rubles, which represents a fall in the value of the ruble of around 61% over the course of the last 12 months and around 37% over the last 6 months. And as we've seen with the yuan and the euro and the dollar, there has been a consistent and steady decline in the value of the ruble over the course of the last year. If we expand the chart out to show the situation over the last 5 years, you can see we've got exactly the same dynamic as we've looked at for the other currencies. There was an immediate fall in the value of the ruble after the invasion of Ukraine. There was then a strong recovery, but over the course of the last year, we've seen that recovery disappear. And the current exchange rate is significantly worse than at any point over the last 5 years. It's also worse than at any point in the last 10 years and at any point in the last 25 years. And 25 years ago, 1 Indian rupee was worth around 0.25 Russian rubles, which means that over the course of the last 25 years, the value of the Russian ruble has fallen by almost 5 times against the Indian rupee. This chart shows the movement in the official rate of inflation in Russia over the course of the last 12 months. And the reason I wanted to post this is because there is an intrinsic relationship between the value of your currency and what's going on with inflation. Russia is a net exporter. It exports large volumes of oil and natural gas and other commodities all around the world. But despite the fact that it's a net exporter, Russia does import large volumes of goods. It's exporting raw materials, but it's importing a lot of finished goods and food products. And the reason that the exchange rate is important is that the price of the goods in Russia will be directly related to the cost in Russian rubles. And as we've just seen, the value of the Russian ruble has fallen significantly over the course of the last 12 months, which means that relatively all of the goods that it's importing will be increasing in price when all of its citizens are having to pay for them in rubles. Over the course of the last 12 months, the value of the Russian ruble has fallen by around 70% against the dollar and the euro, and by around 55% against the Chinese yuan. And the reason that the Chinese yuan is so important is that it's now Russia's largest single trading partner for purchasing imports. And given the significant fall in the value of the ruble, you would have expected inflation in Russia to be at sky-high rates. But if we look at this chart, you can see that it has a very unusual shape. This time 12 months ago, the official rate of inflation in Russia was 14.3%. Now, despite the fact that the Russian ruble was consistently falling in value, over the course of the next 6 months, inflation actually fell every single month in Russia, and by February 2023 was sitting at 11%, which is still relatively high, but not compared to the fall in the value of the ruble. Bizarrely, in March and April, which was a period when the Russian ruble continued to fall in value, so imports would have become more expensive, inflation actually went down to 3.5 and 2.3%, which meant that Russia had one of the lowest rates of inflation in the world at that point. And that really doesn't make any sense. Now, over the course of the last 3 months, we have started to see an increase in inflation to 2.5% in May, 3.3% in June, and 4.3% in July. But at 4.3%, Russia is still at a relatively low level. This is significantly lower than countries such as the UK and the USA. And as we've talked about a lot on the channel, there is a direct relationship between what's going on with interest rates and inflation. Generally speaking, if you have high levels of inflation, you will want to increase your interest rates to discourage people from spending, to increase the cost of debt, and therefore bring spending back down. So let's have a look at what's been going on with interest rates in Russia. This chart shows the movement in interest rates in Russia dating back to March 2022, which was the period when Russia commenced its invasion of Ukraine. And you can see at that point, the official rate of interest was sitting at 8.5%. Immediately following the start of the war, Russia increased its interest rates to 20%. So this was an emergency measure to stop a huge increase in inflation. However, bizarrely, between April and July, despite the fact that the war was still going on, the Russian central bank introduced a number of large and rapid decreases in the official interest rate. And by October 2022, the official rate of interest was 7.75%. Now, as you may be aware, the consequence of reducing interest rates is usually to encourage spending, and that can lead to an increase in inflation. But as we just saw from the graph, over this period, there was actually a month-on-month reduction in inflation in Russia. And those two movements, a reduction in interest rates and a reduction in inflation, doesn't really marry up with generally accepted economic principles. Now, between October 2022 and July 2023, there was no movement in interest rates. However, the meeting in July 2023 resulted in a 100 basis point increase in interest rates to 8.5%. And the reason I wanted to highlight what's going on with regards to the movement in inflation and interest rates is that it doesn't really stack up. The words and pictures don't match. What we've seen going on with regards to inflation and interest rates is very surprising. This chart shows the daily value of Russian fossil fuel exports dating back to the 1st of January 2022. Now, in terms of the colour coding on this chart, the blue section at the bottom represents the value of coal exports. The large purple section above that represents the value of crude oil, which is obviously the biggest single export that Russia has. The light brown section above that represents liquefied natural gas. There is a very thin blue line representing liquid petroleum gas. The lilac section above that represents refined oil products, and the orangey brown section at the top represents pipeline gas. So if we start off by looking at the situation in January 2022, which was prior to Russia's invasion of Ukraine, you can see that at that time, Russia's total daily revenue from the sale of fossil fuels was around 775 million euros, which equates to around $850 million. Now, if you look at this chart, you can see that there are three vertical dotted lines, which mark significant milestones in terms of Russia's international trade. The first of these is marked on the 24th of February 2022, which was the day that Russia commenced its invasion of Ukraine. And interestingly, if you look at what happened to the total revenue for Russia, you can see that immediately following the invasion, there was a significant increase in the total daily revenue, which reached around 1.2 million euros or $1.3 million. And the main driver for that increase in total revenue for Russia was the significant increase in the price of natural gas. A lot of Europe was entirely dependent on those natural gas supplies for the production of electricity, and therefore a lot of countries had to keep buying Russian gas, and the cost of that gas increased by around 4 times. So this represented a huge increase in the total revenue that Russia was earning. However, since that point, we have seen a consistent decline in Russia's total revenues as a result of the fact that most of the countries in Europe decided that they no longer wanted to keep buying all of these Russian fossil fuels, and so strong efforts were made to find alternative suppliers. However, as we've discussed many times on the channel before, it's difficult to be able to replace natural gas supplies because the only way of doing that is to buy liquefied natural gas, and in order to convert that liquid gas back into a gaseous form, you need a regasification facility. So it took a lot of the countries in Europe around 12 months to be able to find alternative suppliers. If we then look at the other two milestones that are recorded on this chart, the first of these was the 5th of December, which is when the European Union introduced an outright ban on the purchase of all seaborne transported crude oil from Russia. And then we have the 5th of February, which is when an outright ban was introduced on the purchase of all seaborne refined oil products for the European Union. And you can see that following the introduction of both of those bans, there has been a reduction in the total revenue that Russia is earning both from crude oil and also from refined oil products. And if we look at the situation right now, you can see that the total daily value of Russia's fossil fuel exports is around 500 million euros or around $550 million. Which means that compared to the level of trade that Russia was achieving back in January 2022, so before the war started, Russia has seen a fall in its daily revenue of around 35%. However, if we compare the level of trade that Russia is doing today with the spike that was seen immediately following the invasion of Ukraine, there has been a fall of around 60%. And the reason I'm showing these figures and going through it in some detail is that the demand for Russian fossil fuels has a direct link to the value of the Russian ruble. And the 60% fall that we've seen in the level of trade that Russia is doing with the rest of the world is almost the same as the fall in the value of the ruble that we've seen over the course of the last 12 months. So what's the summary and conclusion today? Well, I wanted to post this video really to give you an up-to-the-minute update as to what's going on with the Russian ruble. And as we've discussed in today's video, the official exchange rate against the US dollar is now more than 100 rubles to $1 US. And this is the first time in Russia's history that it's hit this landmark level. And this is definitely something that President Putin was looking to avoid. There has been a lot of talk about the strength of the ruble being directly linked to the strength of the Russian economy. And in the immediate few months after Russia's invasion of Ukraine, when the ruble was performing very, very strongly, everybody was talking about how well Russia was doing. But if you look at what's happened to the ruble over the course of the last 12 months, there has been a significant and consistent decline in the ruble. And this is because the ruble is now moving towards an entirely free float. This is the price that the international markets are telling Russia that the ruble is worth. And if you believe that there is a direct link between the value of currency and the strength of an economy, this tells us that the problems that we're seeing with the Russian ruble are a reflection of problems in the Russian economy. And as we've seen from today's video, the level of trading that Russia is now doing with the rest of the world has fallen significantly over the course of the last 12 to 18 months. There was an initial spike in trade following Russia's invasion of Ukraine as a result of the fact that the price of all of its commodities rose in the international markets. So Russia was able to make bumper profits for a short period of time. However, as the sanctions have started to feed through and Russia has lost a lot of its core markets, it's had to pivot and try to find new markets. And the problem that Russia is facing is that it's having to sell its products now into those new markets at a discount. So it's earning less per barrel of oil than it was historically. And that problem is being accentuated by the fact that we're seeing a global slowdown, which is resulting in a reduction in the demand for oil and natural gas, which is bringing the price down. So this is a double whammy from Russia's point of view. International prices are falling, but Russia's prices are falling even more rapidly because of those discounts. And as the value of the Russian ruble falls in the international markets, it increases the cost of everything that Russia is importing. And over the course of the last 12 months or so, we have seen a lot of multinational companies exiting from Russia. They no longer want to carry on trading in Russia. They don't want to keep up their facilities. So Russia has nationalized a lot of those businesses. But the problems that Russia is encountering is that it's lost access to, firstly, technology. The sanctions prevent Russia from accessing lots of different technology, but it's also lost knowledge and experience. A lot of the companies that were doing business in Russia were bringing the wealth of experience with them. That's all disappeared. And in addition to that, we've also seen a huge brain drain. Over 1 million people have left the country, and this was some of Russia's brightest. And the combination of all of these factors is making it more and more difficult for Russia to be self-sufficient. It is still dependent on importing lots of different goods, and the cost of those goods is rising because of the fall in the value of the ruble. So the overall summary of today's video is that over the course of the last 12 months, we have seen a crash in the value of the ruble. It's now past a landmark level of 100 rubles to $1, and unfortunately from Russia's point of view, this isn't the end game. We are likely to see a further deterioration in the value of the ruble over the course of the next 3 to 6 months. That's going to put even more pressure onto the Russian economy at a time when the value of Russia's exports is falling as a result of lost markets, reduced volumes, and falling prices. So the outlook for the next 3 to 6 months from Russia's perspective is negative. Things are going to get more and more difficult, and as Russia continues to post more deficits, it's having to rely on its national wealth fund, and unfortunately from Russia's point of view, that fund is finite and is reducing rapidly. And there is a real possibility that if things continue deteriorating at the current rate, that Russia could run out of cash at some point over the course of the next 12 months. So hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.